Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. At the start of the year, analysts thought Federal Reserve could announce as many as 6 interest rate cuts in 2024. So far, it hasn't announced any. But chances are good a rate cut will be coming in September. According to the U.S. Federal Reserve's Jerome Powell, the U.S. is in, and I quote, no longer an overheated economy with a job market that has cooled and is mostly back to where it was before the 2020 health crisis. Analysts at Citi have predicted the Fed could cut interest rates by 200 basis points or 2% over its next 8 meetings through the summer of 2025. And assuming that happens, that would take the Federal Reserve's benchmark rates down from in the range of 5.25% to 5.5% all the way to 3.25% to 3.5%. And even if that does happen, rates will still be above pre-pandemic levels of 1.5%. And interest rates are expected to remain above those pre-2020 health crisis levels for years to come. And those decade-high interest rates will continue to be great for business development companies, or BDCs for short, like PennantPark Investment Corp, traded on New York Stock Exchange under symbol PNNT. John?
Thanks, Mo. Yeah. PennantPark Investment Corp is a private equity fund that focuses on companies owned by middle market private equity sponsors with a track record of supporting their portfolio companies. Now, why middle market companies? The U.S. actually middle market includes nearly 200,000 companies that generates $10 trillion of annual revenue and is the world's 5th largest economy on a standalone basis. Its core focus is U.S. companies, where it invests between $10 million to around $100 million across the capital structure, which includes senior secured loans, subordinated debt, and other investments. And it invests in companies with earnings of $10 million to $50 million. Its debt portfolio currently consists of 97% floating rate investments and 3% fixed rate investments. Its current portfolio size is 138 different companies with an average investment size of $8.5 million. Now, some of the industries targeted by PennantPark include business services, healthcare, financial services, aerospace, defense, and leisure.
Its second quarter net investment income helps support its dividend.
Yeah, even with the recently announced 14.3% increase in its distribution, the company's dividend is well covered. For the second quarter of fiscal 2024, ended March 31st, PennantPark announced that revenue or investment income, $36 million, which was down slightly from $36.3 million in the same period last year. Fiscal second quarter net investment income was $14.3 million, or 22 cents per share, down from $16.6 million, or 26 cents per share in the second quarter of fiscal 2023.
As you mentioned, management increased its monthly distribution 14% to 8 cents per share.
Yeah, thanks to its robust earnings stream, PennantPark is able to provide investors with a reliable monthly distribution. Now, if you look at the company's chart at incomeinvestors.com, it might look like it cut its payout in late 2023. It didn't. That's when it switched from a quarterly dividend to monthly dividend. Now, back in June, the company increased its monthly dividend payout 14.3% to 8 cents per share, and it has maintained that payout since then. Most recently in July, it declared a monthly distribution of 8 cents per share, or 96 cents per share on an annual basis, for a pretty big forward yield of 12.32%.
Stock hit record high as well.
Well, yeah, it's always great when you can find an ultra high yield dividend stock that's also bullish. More often than not, high yield is accompanied by a lower share price. That's not the case with PennantPark, at least not right now. On July 9th, PNNT Stock hit a new record intraday high of $7.95 per share. And as of this recording, it continues to trade near that level. Pennant stock is actually thumping the broader market up 17% over the last 6 months, 21% year to date, and up 47% year over year.
Thanks, John, for your insights. Just to recap, PennantPark Investment Corp is a great BDC with a strong underwriting process that helps it invest in strong middle market companies. With 97% of its debt portfolio floating rate, it is able to generate lots of cash, especially in high interest rate environment. And thanks to a BDC loophole, it needs to pass along 90% of its taxable income to investors in form of high yield distributions. Going forward, the company's earnings stream is expected to remain robust, which should help it to continue reward buy and hold investors with monthly distributions. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned, and in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.